Aloha, YouTube investors. How is everybody today? Today is July 31st. It's a Friday of 2020. My name is David Yansen. Thank you for checking out my channel. Please subscribe, like the video if you find it informational. Today we are looking at my M1 Finance portfolio, and this is the individual side. And as you can see, for the day, the U.S. stock market has closed for a few hours now, and I was waiting to do a little bit of research on one of my holdings here that I'm going to highlight in this video to see more about their earnings, what parts I wanted to, the main part that I wanted to show is their revenue and their earnings per share. And then I remembered that my lease is due in September, and my landlord, the owners of this building, they weren't going to be coming in to do a physical inspection. I had to do pictures and video around the place to send to them. So that meant I had to do a quick pickup job of some clutter, and then I ended up doing a stay-at-home haircut and made some pork chops, and then I was like, oh, forgot to do the video. So here we are with the video looking at my individual side of my portfolio for M1 Finance. For the day, you can see I am down 12.32%, or dollars, not percent. I'm down 0.28%, and we're sitting at 43.92. My blue chips, I do have other videos breaking down all of my holdings inside here, so if you want to check out those videos, feel free to do so. But this one, I wanted to focus on one particular holding that I have, so I'm just going to show you my blue chips were in the red by this much, my REITs were in the green for the day, and then my other slices were in the red. Now, because these are in the red so little bit, you know that some of the holdings on the inside were in the green. But I'm not going to go through all of them in this video. I do have other videos that I did earlier this week and probably all this month and last month on my different holdings for my Robinhood portfolio, my M1 Finance portfolios, 2 accounts, webull, and I also have SoFi Invest, which I dropped a video this morning for Hawaii anyway. So check out the links in the description. You can sign up with Robinhood and get 1 free stock. I feel like I got a really good company for my 1 free stock. I have a video on that, and I feel like I got 1 good company with webull when I signed up with them. I got 2 free stocks. The first one was free for signing up, and the second one I got after I deposited $100. The first one that I got with webull wasn't very good. It was actually absorbed by a different company, and they cashed me out for that. The second one that I got, I felt was a good company and has good upside for the future. So anyway, I digress. Let's highlight. We're going to click into my pie here for blue chips, and we are going to, you can see some of the different holdings that I have here. I love Verizon, very stable, very safe. Not a financial advisor, and I don't know your personal situation, so do your own research, but Verizon is one of those stocks that I don't know why you wouldn't want to hold. They're just steady, stable, and safe, and pay a great dividend as well. So as a dividend investor myself, I am primarily a dividend investor. I love Verizon. Disney isn't paying a dividend anymore, but they're still going to be a great company, and probably will resume that again the next couple years here. But we are highlighting ABBVIE. ABBVIE, if you don't know, is a pharmaceutical company. I have a little over 2 shares with them. I primarily do all fractional shares, and the reason why I do fractional shares is because I don't have a lot of money. So ABBVIE right now is trading at $94.91. As you can see, I'm down for the day. All time, I am in the green with ABBVIE because they're a really, really good company, and they have a crazy dividend yield, but it seems like they'll be able to maintain that dividend yield. There's a website called Simply Safe Dividends. I believe that's the name of it. I did a 14-day trial on it because the subscription is $400 for the year. I don't have $400 for the year. I'd rather put the $400 a year into my Roth IRA or into Amazon or something like that. You know what I mean? So, but when I was on there for the 14-day trial, I believe they had ABBVIE safety score of a 64 or something like that, which they say 60 and above means the dividend is strong. They'll be able to continue to pay their dividend. I do have some other companies in my Roth IRA, if you check out that video, that have dividend scores of 99, which means it would be something completely strange and absurd that would cause the company to have to cut their dividends. So, and as a dividend investor, you want to get paid every single quarter or every single month because of your holdings. And I have a video on the companies that pay me every single month to hold their shares. So, but going back to ABBVIE here, my cost was $225 for these shares, so I feel like I got it in as a decent price. And like I mentioned, their dividend yield is pretty high. This is saying 4.6%. I think M1 Finance might be off a little bit here. Annually, they pay out $4.50, and the PE ratio, I feel this is good compared to a lot of other companies, especially a lot of other companies with a market cap of over 100 billion. So looking at what ABBVIE did today as they reported their earnings, ABBVIE Friday morning, July 31st, they had a revenue that beat expectations, $10 billion, almost $10.5 billion, $10.43 billion, which was a growth of 26%. And their earnings per share beat as well too at $2.34. So good things again with ABBVIE. And if you know anything, if you don't know a lot about ABBVIE, they own the rights to Humira. Humira? Am I saying that right? Humira, yeah. Sometimes I say, anyway, cut it, edit. I really don't edit my videos. I probably should. It's raw and in living color. But their Humira sales worldwide have declined as they've lost some patents. In other parts of the country, in the U.S., their sales, that's their number one drug, has their patent is going to expire in 2023, and that's why I believe the purchase of Allergen, the maker of Botox, was like a blockbuster deal for them, and that's just my opinion. Yes, revenue was down, and they saw a decrease in sales of about 20%, 19% and a couple points in sales, but a lot of spas were closed. I'm assuming that's where you go for Botox and other therapeutic type procedures that people do. My sisters don't Botox. I don't Botox. We're pretty young. So I'm 45. My oldest sister is 46. So I don't think I will ever Botox. I don't know if I want needles in my forehead or my cheeks, but it works for a lot of people. A lot of people like it. So I do believe that was a great deal for them, because once spas and everything open back up again, those sales are going to go through the roof. When barbershops opened back up and salons started opening back up for people to get their hair colored, trying to get their gray right, and getting haircuts and stuff, there were lines out the door. I am still cutting my hair at home by myself here. So the back might not be the best, but when I would go to the grocery store, I saw Supercuts a line down the street, because people were locked in for like 2 months. So ABBVIE, their Botox sales are going to go through the roof as soon as those services get back going again. It might not be till midway through summer of 2021, but eventually they'll be back. So for this video, just wanted to highlight ABBVIE there. Check out my other videos. Also, don't forget to subscribe to the channel. It supports the channel. I do appreciate it. I hope everybody has a great weekend. Be safe, healthy, and wise this weekend. Mahalo and aloha.